So the headline here is stocks are still booming. Up big time again today. There you can see it on the screen. 366, 32, and 108 for the three major indexes. And we are at the high point of the year. We're closing in on a record for the S&P 500. And oh, by the way, manufacturing was down. Retail sales stronger than you think. Let's get all of it from John Carney, Breitbart economics and finance editor and co-author of the must-read daily Breitbart Business Digest. John Carney, smart guy that you are, why is the stock market booming? I mean, it's really booming.
Well, one, I think exactly what you were talking about in the prior segment. People say Trump is getting more likely to get elected every time they're threatening to indict him. And everybody remembers the stock market did really well when Trump took office. So I think people are saying, yeah, look, that's happening. I think there's also a little bit of interpretation of the retail sales number. People said it came in weaker than expected. It was 0.2 on the headline number rather than 0.3. So they said maybe that means the Fed doesn't have to raise as much. Maybe we're going to get a soft landing. I think that's wrong, but I think that's what boosted the...
You know, that's a good point. I just want to emphasize that. The so-called core retail sales were up 0.6%.
That's right.
Actually beat estimates. And the Atlanta Fed GDP tracker marked up a little bit to 2.4 in the second quarter. Now, that's kind of yesterday's news, but it is important. You know, while we're talking, we have a chart, I think, of the stock market under Trump and under Biden. Maybe the producers could scramble and find that while we're talking about. The bad news today was manufacturing was down in May and June. April must have been revised slightly up because it was originally negative. But, John, consumer goods production down the last 2 months and business equipment production flat and down the last 2 months. Now, that's supply-side growth.
It is.
We need consumer goods to meet consumer demand. We need, you know, business equipment to meet all demand. So
right, the business equipment
what's up with that?
Is very troubling because that really is businesses planning on expanding. And what we're seeing is they're not planning on being very expansionary over the next... This is a year ahead, basically. But again, a lot of these plans were set in the beginning of this year. So when you're seeing what businesses are spending on business equipment right now, it reflects what they thought the economy was going to be doing back in January. And remember, we all thought that we were going to have a recession by now in January. So I think there may be a little bit of a lagging indicator in that number. The consumer one, I think, is troubling. However, I think it just reflects a lot of spending going out of goods and into services. And so that's what we're seeing.
Year-on-year, consumer goods production, manufacturing of consumer goods down 0.7% year-on-year. Business equipment down 0.2. Up on the full screen, though, it's very interesting. Look at the Trump stock market versus the Biden stock market. Even with this rally, last year was a very, very bad year for the stock market, so some of it's coming back. But Trump did very well. So I just wonder, I mean, I know it's a bit cynical, but nonetheless, the more Biden wants to throw Trump in jail, the more people come around to Trump's side because they see Biden politicizing and weaponizing the justice. Now, I have no idea if that is having an impact on stocks, but I do think stocks prefer lower taxes and deregulation. Tell me if that's...
I think that's absolutely right. I think people are saying, look, every time they come after Trump, he gets more popular and more likely to get reelected. We're just catching up. You're right. Last year was a very bad year. We're just catching up with where we were last April. Right. I think we just passed that. So that's great. I'm glad that we're above where we were before things started to go down because of Biden inflation. That's what caused the stock market to go down. And now we're just catching up with that. It hasn't been a very good run. It's ironic because Biden keeps bragging about Bidenomics, but the Bidenomics is really just us catching up to all the damage that he's done. He said wages are getting better. They've gotten better for 2 months, and we're still catching up to where they were before he took office.
Pre-pandemic also is fascinating. Liz Peek wrote a piece. She's coming on in a minute. Biden brags about manufacturing jobs. The reality is manufacturing jobs total, the whole economy-wide, about 13 million pre-pandemic. Today, they're about 13 million.
Right.
So it hadn't really changed
The same with wages. He said, oh, we're now above, real wages are now above where they were pre-pandemic.
Right.
You're like,
not true.
That was 3 years ago also, by the way, Mr. President. They definitely should be above where wages were 3 years ago, especially when we had so much inflation that we're just now getting past it. That's a big problem.
Last one you mentioned, home builders survey looked pretty strong.
It does. So while we have weakness in manufacturing, strength in consumer, home building is doing really well because so many people are really locked into their homes because of low interest rates on their mortgages that there's no available existing homes for sale. So home builders are having a very good time.
Mortgage rate, 30-year mortgage is over 7%.
Right, but only about 10% of all borrowers have a mortgage over 6%. So if you're down at 5, 4, 3%, you're not going to sell and then have to buy into a 7% mortgage. So people aren't putting their homes on the market. I think actually that fed into the retail numbers as well because there was a big increase in spending at furniture stores. Why is that? Because if you're not going to sell your house, you might as well put nicer stuff in it.
Put more money into it.
Yeah.
Don't let anyone hear that. All right, John Carney, positive. Breitbart, number one. Number two, encyclopedic. Thank you, John.